We're now dealing matters in relation to the banking sector and KBC. I want to welcome KBC to the meeting. Mr. Robin, this is your first time, I think, to come before us. Ms. Dara Deering, Barry Darcy and Brendan Mann. So you're all very welcome. Before going into the meeting proper, I want to read the note of privilege. I wish to advise the witnesses that by virtue of Section 17(2)(I) of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to do so, you are entitled thereafter only to a qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that, where possible, you should not criticise nor make charges against any person, persons or entity by name or in such a way as to make him, her or it identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on, criticise or make charges against a person outside the House or an official by name or in such a way as to make them identifiable. I will now invite Mr. Robin to make your opening statement, please.
Thank you, Mr. Chairman. Mr. Chairman, members of the Oireachtas Finance Committee, thank you for inviting us here today. Can I first introduce our team, Ms. Dara Deering, our Head of Retail Banking, Mr. Barry Darcy, our Chief Risk Officer, and Mr. Brendan Mahan, who heads our Arrears Solution team, and myself, Peter Rubin, CEO of KBC Bank Ireland. We understand the importance of these hearings and of your committee, Mr. Chairman. As elected politicians, you represent our customers and the people of Ireland, and we appreciate this opportunity to engage with you. We will, of course, answer any and all questions you may have following completion of the statement. If we don't have the answers immediately at hand, we will endeavour to secure a response in a timely manner. I'm delighted to have been appointed CEO of KBC Bank Ireland. This country is vibrant, outward-looking, it's ambitious for its people and places a premium on innovation, so it is an exciting prospect for a bank like ours. And whilst I'm new to Ireland and arrive here at a good moment in a thriving economy and society, it does not mean that I am unaware of events in Ireland's recent banking past. I see it as essential to my mandate to show our customers that we have absorbed the lessons necessary for embedding positive change, ensuring that their needs stand at the centre of KBC's way of doing business. That process of change has begun in KBC with a comprehensive transformation plan being put into place step by step. This plan will be underpinned by the Pearl values we hold throughout the KBC Group, values of performance, empowerment, accountability, responsiveness and local embeddedness, which means that as KBC we embrace the diversity of our teams and our customers in all our local markets. I recently had the pleasure of meeting the chair of the newly established Banking Culture Board, Justice John Hedigan, with whom I was extremely impressed, and I'm pleased to share with you that Dara Deering will be representing KBC on that recently established board. My experience has taught me that for cultural change to be credible and sustainable, it takes time, hard work, and you must have a clear horizon to move towards. It starts at the top, definitely, but must ultimately engage every last member of our staff. It also requires that all financial institutions work together towards that horizon with the common goal of rebuilding the trust in our sector. It is my intention that KBC Bank Ireland fully embrace Irish society's call for change. KBC represents choice in Irish banking, and we are committed to making banking as easy as possible for Irish people. Customer needs are changing rapidly, very rapidly. We understand this, and this is why we are combining customer service with unrivaled digital capabilities to deliver a unique, innovative and transparent banking experience. We provide the kind of ease and convenience that people are looking for so that they can get on with living their lives. We are building a banking of the future model with customer ease at the heart of it. The recent launch of KBC Multibanking means that customers of KBC can today consult their balances with other Irish banks through their mobile app. We are the only bank to have opened our banking app to the digital walls of external providers. And we, as a market first, recently launched 2 socially responsible investment funds. These funds are designed to balance environmental and social good and offer more investment opportunities to socially conscious consumers in Ireland. For customers seeking person-to-person interaction, Our KBC hubs have longer, more customer-friendly opening hours, and our contact center is available 24/7, 365 days in the year. We are about to step up and extend this innovative approach with a KBC business banking service specifically designed for micro SMEs in Ireland. Our Q1 results tell a positive story about the choice we offer in the market. More than 18,000 customers joined us in the first quarter, bringing the total to almost 300,000. We disbursed €260 million in new mortgages, which represents an increase of 9% year-on-year. And the digital mobile activity on our apps increased by 50% year-on-year. So the model works. Overall, KBC Bank Ireland reported a net profit of €15 million after tax and impairments for the first quarter of this year. And these results show that customers are seeking that alternative choice in the market. The remaining non-performing loans at KBC Bank Ireland now concern primary dwelling homes. Our approach here remains, that this has been for some time, to reduce these non-performing loans in an organic way. In this, communication is key, and every effort is made to establish and keep open communication channels with every individual customer who is experiencing difficulties meeting their repayments. In my first week of arriving here, I have visited our arrears solution, headed by Mr. Mahan, in order to gain a clear understanding of what is happening on the front line. We have also a special team who look after the most sensitive cases, and I sat down with them to look at some of the cases they have at hand. When it comes to the issue of non-performing loans and arrears, I believe we should continue to tread carefully. These are, well, every case is a person and a person's home, and so we must remain conscious of the vulnerability of those who find themselves in difficulty and behave accordingly. All the arrears cases related to a borrower's principal dwelling house are afforded the benefit of the mortgage arrears resolution process as set out by the Central Bank of Ireland in its Code of Conduct. And the success of these mortgage arrears solutions at KBC is evident in the number of arrears cases where resolution options have been implemented. In about 90% of the arrears cases, borrowers have agreed the resolution option with KBC over the years. Resolution options remain available at any time to the constructively engaging borrower, regardless of a borrower's history and at all stages of the legal process. So the loss of a home is, of course, a significant trauma in someone's life, and it is why we insist on repossession being an action of last resort, coming at the end of an extensive process designed to identify a solution that keeps the occupant in their home. The tracker mortgage examination has also been a top priority for KBC, and we are determined to right the wrongs experienced by our customers. We do not anticipate material changes to the number of cases for redress beyond the figures we published at the end of the first quarter. I would, at this stage, like to acknowledge our errors again in relation to the administration of tracker, and as newly appointed CEO, add my sincerest apologies to that of my predecessor to those affected. Can I also publicly commit us to taking on board the lessons learned on behalf of our customers? The Irish economy has begun 2019 in good stead, with domestic economic activity underpinned by strong increases in employment and an improvement in household spending power. While an emerging weakening of global economic growth will restrain Irish activity, the UK and US economies have performed better than expected of late, and this has supported Irish export growth. A young, well-educated and growing population, allied to encouraging trends in public financing, an ambitious infrastructure program and significant foreign direct investment suggest scope for the Irish economy to remain on a healthy path in the coming years. As for Brexit, we can only take note of the ambiguity around the whole process, and to this point we have seen no material effect of on KBC activity or our customer relationships with us. The nature and scale of the long-term impact of Brexit on Ireland will depend on a range of factors. We remain watchful, but whatever happens, I believe KBC Ireland is as ready as it can be. In summary, Mr. Chairman, members of the committee, KBC Ireland represents choice in banking in Ireland. My mandate is to stay in tune with changing customer needs, innovate for more convenience and transparency, and thereby continue growing our customer base. At the same time, we are very aware, and I'm very aware of the need to stay in tune with the demand for change in Irish society, and that is also part of my mission. I thank you.
Thank you very much, Mr. Owen. Senator Harkin.
Thanks very much, Chairman, and thank you, Mr. Robin. You're very welcome to your first meeting. I'm sure it won't be the last meeting that you'll be with this committee, and indeed to your colleagues, Mr. Deering, Mr. Darcy, Mr. Mann. You're all very welcome. And we have had meetings like this before, as some of you are familiar, and I'm sure you've looked at transcripts and recordings of previous meetings, perhaps. I suppose it's a relatively upbeat opening statement. I think you're very positive about the economy, but I'm struck by, I suppose, the positivity in your statement relative to your predecessor, who I think, if I'm right, had a phrase that we are closer to the next recession than we are to the last. And that was a line that kind of has stuck with me ever since he made the point of it. And, you know, while we are fortunate, relatively fortunate in terms of corporation tax receipts, low interest rates on our national debt and so on, there are lots of uncertainties, and you've outlined Brexit. Just in terms of I suppose since our last meeting with KBC, I'm hearing anecdotally from lots of people around the country that lending has almost stopped, that people are very wary of taking on debt, which is possibly not a bad thing in some ways, but that there's an awful lot less take-up. There's an awful lot of people are worried about Brexit. There's an awful lot of people worried about, US and China trade wars and various other things, stock market decline. What are your thoughts on where the economy is going? And maybe you might be able to, after your closed period, be able to outline to us the kind of the nature of the lending that you are engaging in, and if it's less than what you anticipated.
Yes, thank you for the question. That we are closer to the next downturn than the next upturn, I would, of course, on the right. In my previous job, I was looking at that as head of credit risk globally for KBC Group. But as for the situation here in Ireland, our chief economist, who keeps a close eye on things, is still quite upbeat for the immediate expectations in terms of Irish economy. We still expect a 3.5% GDP growth, which is, by the way, slightly more conservative than what the IMF is still forecasting. I think they were still at 4.7%. So I think as things stand, the outlook is still positive. Of course, we look at it in our activity, particularly from the retail client perspective. As I said, our mortgage distribution was up 9% year on year. The year started a bit slower than we expected. In all honesty, at the end of last year, in the first month of this year, activity was less, but then in February, March, we clearly saw a pickup, which for the time being is continuing. So I think what happened on the retail side was probably the scare around Brexit at that point in time. Where were things going has kept a number of consumers back from making the step. But that seems to have recovered. It's true that where house prices are now in the market, that is a concern in terms of retail lending. I think affordability for a lot of potential borrowers is a real issue. And that has to do, of course, with the imbalance between offer and demand in terms of new housing coming to the market. Although also there you see our expectations are 22,000 new dwellings coming to the market this year at the present rhythm, comparing to 18,000 units last year. It's true that our estimates are that about 35,000 units per year would correspond to kind of normal demand and offer balance in this market. So we're still somewhere behind where we should be. So in that sense, we remain relatively optimistic. It's true that there are many uncertainties there. Brexit is, of course, in this, and I'm hardly an expert on Ireland after 7 weeks, so I'll be humble about that. But of course, Brexit is a big sort of Damocles about expectations in growth, but it can still go in any direction. And of course, the recent announcement of the ECB to keep interest rates at a much lower interest rate going for a much longer term is a fuel to continuous growth. So we think, I summed up a number of elements that I think plead in favor, definitely of short-term economic outlook for Ireland. How that affects potentially lending demand or investment demand in companies, I am ill-placed to answer because it's not a market that we are very active in. So I can give you macroeconomic figures, but not a real personal feeling from our bank's point of view.
Okay, thank you. And I mean, some people may, KBC as a brand in Ireland is relatively new, but I think most of us are cognizant of the fact that it was owned, and IIB was a predecessor bank which had a very long-term presence in Ireland, albeit maybe not at the retail level that you're engaging with now. And maybe just for the benefit of people maybe looking in terms of your branch network and in terms of your retail offering, in terms of cashless or non-cash transactions within branches or machines and so on, maybe just outline why how your customers, I mean, I know you've been investing heavily in digital and in apps and in trying to get people to not to stay away from branches, but to be able to do business without having to go to branches. Could you just outline for us where that's going in terms of the future technology?
Yes, we think the future is multi-channel. So it's not that we basically go to a future where there is no personal engagement anymore, but we see the branch, as you call it, the hub, as we like to call it, so a place where a person can have a personal interaction with another person on the bank side as a support channel. Today, that is very mixed. You still have a group of customers that will prefer to go to the hub and speak to someone in the local hub first, and then move to do transactions on a digital channel. But more and more, we believe, and we see this also in our other markets, that the group of customers that primarily wants to engage digitally and wants to basically even onboard digitally and only go and ask for personal support, be that physical interaction or through a contact center or through an application, I will not mention brand names here, in an electronic interface application, that group is growing. It is so that in our very traditional home market of Belgium, last year, 56% of clients did not go to a branch anymore. They passed a full year without going to a branch. When we were making projections 3 years ago about this trend, we totally underestimated this. So again, I am too recent in the Irish market to really put that into a context, and I see, of course, and Ms. Deering can probably give more background to that. She's more versed in that. But it is a trend that is happening across our markets. And what we have experienced in other places is that this take-up of digital starts very slow and goes very gradual, and suddenly it takes off very fast. So once you have the model at a certain pace and people start taking it up, you get word of mouth, this goes faster. So we think that there is absolutely always has to be a place that a customer can contact a personal advisor, a person, to have that advice. More and more, the interactions will generally be done digitally and at a distance.
And maybe just to add to that, if I can, so to put those numbers in an Irish context, 9 out of 10 of our customers don't go to a physical hub. They actually deal with us, whether it's in the contact centre or indeed in a digital way. And that just shows you the change in consumer behaviour. I think it's important, as Peter said, to remember the customer has to have the choice, because the different customer segments, or indeed if it's maybe for an investment or a large decision, may want some face-to-face contact. I think the reality is, as in that's what we see in the other markets, that face-to-face may not be the traditional physical face-to-face anymore. It may be video or some other mechanisms as well. But definitely Irish consumers are responding very well to the choice we're given in this marketplace.
Just to clarify, because I'll acknowledge I'm not a KBC customer, and so 90% of your customers now are not using the branch, so even higher than the 50, even higher than the 56%.
That's the Belgium number that Peter was referring to, and Belgium is a very big, and KBC market, is huge, obviously, in Belgium, so it's a more traditional bank. In Ireland, obviously, we started our model with that multi-channel, and 9 out of 10 of our customers only deal with us over the phone or in an electronic way.
And other than ATMs, your branches are cashless?
That's right. We've built our proposition recognising that change in customer behaviour. Customers still have access to cash if they want to do so through an ATM network. And
have you seen, in terms of your customers, in terms of people that are using debit cards and credit cards, can you see that that's the way the transactions are going now? People are tapping, and it's cash. Even the volumes of it through your ATMs are falling, or whatever. That's correct. I mean, even if you just looked at contactless, to take your example, 40% of all our debit card transactions now are contactless. And people are also using digital wallets, because I know there was some comments here at this committee before, well, contactless only goes up to €30. That's the scheme. But actually digital wallets, so if you have it in your, like an Apple Pay or Fitbit Pay, there's no limit because it's a more secure system. And now about 6% of all our transactions are through the mobile wallet. So definitely consumers of all ages are dealing in a more electronic way, and there's the cash, the actual ATM transactions have reduced considerably. And your branch network, or your hub network, if I'll try and get the terminology right from your hubs, and unfortunately in this country hubs have now taken on a different connotation through the Department of Housing and Planning in providing some level of accommodation, but in these family hubs, but hopefully that will change over time. How many hubs do you have?
We have 16 at the moment.
And they're mainly in reasonably large urban centres.
Yes.
Yeah. But equally, there are customers who can, in any part of Ireland, so subject to a reasonable email or phone signal, they can be customers of KBC.
Exactly. Yep.
Okay, thank you. Just in terms of, I suppose, your mortgage customers and so on, you have differences between your LTV rates for. You have quite a high rate for greater than 90% and much lower rate for lower. And it's been estimated by people that, there's about 32,000 customers there who could save quite a bit if they went off and got themselves a valuation. What are you doing, I suppose? To be fair, it's there, it's available, people can exercise it. It's probably not in your bank's financial interest to do it, but they are your customers and you have a duty of care to them. The offering is there. How much or how well have you been publicising the fact that, it's estimated that there's up to 32,000 customers could save €1,400 a year, and we all, we're all looking at various ways of cutting our costs and changing mobile phone tariffs or changing ESB tariffs. There's few ways you can save €1,400 that easily.
I think referring to the 32,000 clients still on standard variable rate. What we do, and quite honestly what I was interested to discover, because I think it is quite unique, we write, of course, a legal obligation under the Code of Conduct. So we have already twice written to all these customers, to all our customers, by the way, to inform them that indeed, given the situation they're in, the loan-to-value that they are at, they might qualify indeed for a lower rate, and these rates are then published, so they get an individualized communication. It was done at the end of last year, and I think again in March of this year. In March of this year, all the communications went out. We have seen of that group, I think about 5,000 customers. We can have the exact figure here. 5,000 customers that made a switch. Others have not, so that is increasing, so it has an effect writing to the customers compared to last year. That group was then, I think, indeed 5,000 higher, or 4,000 or 5,000 higher, so it works. But again, it is a very individual case, because the figure you quote is indeed an average figure, but in that group, the clients on standard value rate, the average mortgage is much lower than our total average mortgage. It is around 79,000 euros, yeah, so much lower. So it really depends on individual status whether it's sufficiently interesting for the client. There is always a saving. It's for the client to judge whether he or she wants to go to the process. And the only condition essentially is that they get an official revaluation of the property, so that the value of the property is officially documented, and otherwise the process is very smooth, as proven. So I guess also that when clients receive such a communication, which we intend to do once a year, probably the group that will make the switch will still increase. So it's getting, I think, becoming part of the habit slowly, yeah.
Okay, so just in terms of the amount of customers who have an LTV lower than 90% of, you have this 32,000 customers with an average of about 80,000 who are on the variable rate. Their rate could go from 4.25 down to 2.5?
Yeah, they could go for a one-year fixed rate, for example, at 2.5%. Their average loan-to-value for that population is 44%.
Okay.
Because they tend to be the older type of mortgages. And as Peter said, as a result of that, the motivations for them are less in financial terms than if you look at a new mortgage customer, because obviously they've got the loan for a lot longer.
They've kind of
and larger amounts.
The back broken on it as such.
Exactly, yeah. Exactly. So despite writing to them, and thankfully 14% of them have taken it up, so the figures that Peter spoke to, but there tends to be still inertia in that customer base. They can definitely avail of more rates, and as Peter said, we personalise, so they know based on the information we have on them on file what they could avail of. And thankfully more have this year than last year, and we'll continue to do that. We've information on our website and dedicated phone lines people can ring and find out what's available for them. And
the letter that you send to them, does that quantify a figure, or does it just point out that they could get a lower rate?
It gives them the various range of rates, because obviously they could go for a fixed rate, they could go for a variable rate. There's quite a lot of options available.
But it doesn't quantify the financial amount as such?
No, it quantifies the difference in rates, yeah. And then obviously encourages them to contact us for something more personal to them, depending on what choice they would like to make.
Okay, no, just obviously people, we're all bombarded by emails, we're all bombarded by letters, and stuff comes in and you're looking at it and you're kind of go, oh yeah, 4%, 3%. It doesn't sound like an enormous amount of difference, but in fact, it's if you go from 4 to 3, obviously it's 25% of a difference for people who are reasonably numerate, but not everybody with a mortgage is obsessing. They've families and they've maybe older parents and they've got young children and they've got busy workplaces and so on. And I was struck, I remember when I was going to college, there was a big pressure from whichever bank happened to be on campus because they wanted to recruit everyone, because a certain bank manager said to me a long time ago, you were more likely to change your husband or wife than you were to change your bank account. And that there was that level of inertia was involved with, when you have a bank account, it's so much trouble to change it that you just stay like the mortgage. But we're saying that on average it's about 1,400, but indeed some of those people, it could be 4,500, it could be 5,000, because the loan is up towards the 90% but not at it, and the value might be a lot more than 80,000. Okay, thank you. Just in terms of when we brought in all the various banks, and you're the last of this cycle of this, or the last of the banks in this cycle, two of the main points, and I think we've touched on Brexit a bit, and I accept that you're not an expert on Brexit from an Irish perspective, Mr. Robin, and I don't expect you to be. But the other point was this culture board, and I know, Ms. Deering, you've been put on this board, or nominated to go on the board of the Banking Culture Board, which is a very new process, and we have had their acting chief executive was into us, and Mr. Hedigan and so on, Justice Hedigan. In terms of the KBC culture, where it's come from and where it's gone to, and I'm not saying you're the worst offenders in terms of the culture that we had 10, 12 years ago, how far down the road do you think you are in where you want to be? What have you done to change it, and what do you still need to do?
Again, I'm 7 weeks into KBC Bank Ireland, so I have to qualify my answer in that respect.
But I'm sure you are aware of the Irish division from your Belgian base.
Absolutely. Sorry, Senator, I didn't want to interrupt. So, yes, I'm aware. So it's also not something that I think is unique to Ireland. What happened in Ireland, of course, went much further and much deeper than in other countries, I think, in Europe, and where KBC is active. So what happened here very much was also on the radar of Group, and we discussed it. And to give you a context, we had last year a 2-day session with the entire top 300 management of KBC Group, discussing the issue of culture and the topic of responsible behavior and how to bring that into the group working. And of course, the special experience of what happened here in Ireland was on the agenda very explicitly, as an example of things that shouldn't be allowed to happen and can never happen again. I think when you're looking at it, and let's talk about KBC Ireland, KBC Group now, I think first of all, in terms of risk management and oversight and governance internally, there is a total sea change between what happens now in our institution and what would have happened 10, 12 years ago. So structurally, a whole lot of measures have been taken to have better control and more independent controls. The fact that you have a totally independent CRO, 3 lines of defense and so forth, obvious now, but wasn't the case if you look back 10, 15 years ago, when I could go through a whole technical list of governance issues that were taken. You have also a totally different regulatory environment with a lot of interventions there that provide some needed checks and balances on banking market. I think the third component is the more difficult, but also the more fundamental one. It is how do you get a right balanced behavior in organizations, and this is about making sure that you're constantly making the trade-off output versus outcome. So cost benefits, which is analysis we have to make in generating return on economic capital, but on the other hand being aware that every decision has an impact on clients, and basically does that decision enhance the well-being of the client? Is there a fair balance in how costs and benefits are shared between the bank and the customer? And ultimately, the decisions that we make, are they scalable? Because something that might be a good idea short-term could turn out to be very bad long-term. Something that might work very well for a particular type of customers can backfire badly if you start expanding it across the market. And I think finding a way that you constantly have that dialogue going on at every level in the organization, that is the trick. And I think that's a journey that has only just begun. Because if you could fit that into a big rule book, and you could go to page 25 and say, this is the answer to that question. It might be easy. Reality is life is very complex, and you know, opinions can differ about what is the right balance and not. So at the core, this is about getting a dialogue going and keeping it going in an organization at all levels, top down, and I would say bottom up, but also horizontally, peer-to-peer, and create internally a culture of transparency whereby these doubts can be put on the table and say, should we do this? Should we make this decision on this product? I could give examples from elsewhere in the group also, where you have to make this management of dilemmas, because that's what it is, you know, part of normal way of doing business. Some things are very simple. You know you don't have to do them, and things that are, of course, forbidden by law, of course you don't do them. But day to day, all of us are involved in decisions that incrementally can lead us to a wrong path. And if you ask me where we are, I would say, yeah, in the journey, in the beginning of the journey, and it's something that will never stop. It's a continuous journey. Yeah.
Okay, well, thank you, and I appreciate the level of honesty and the depth of your response, because it may not have been what we get from everybody. I mean, and clearly, banks, you know, by their nature, and in fact give corporate governance responsibilities to make money on behalf of your shareholders and so on, but not at the expense of vulnerable customers, which is often where it happens to be the case, that people are sold products that really are less than appropriate to them, or less than appropriate to their stage in their existence, and they're, you know, giving people loans at an older age when their capacity to repay them is going to diminish rather than increase, and equally selling people very risky products at a time of their life when they should be reducing their level of risk rather than increasing it. And I think, to be fair, you've acknowledged that, and there is always that dilemma between trying to make money and equally trying to acknowledge and that you are in a relationship with the customer, and it's very important, because the customer should be and must be at the centre of everything that everybody does every day. And yes, you know, sometimes that means making less money, but you are writing to customers about their loans, but equally that balance is there, and I think it's important that you have acknowledged it. In terms of I want to draw your attention maybe to question 5 of the questionnaire, which is about voluntary and legal surrender, and you've taken us through the different voluntary and legal surrender cases in terms of you've customer sales of property, voluntary sale proposals, voluntary surrender proposals, and so on, right down to receiver proceedings. In terms of receivers, how is that working in terms of receivers being appointed to private dwelling homes?
I would like to hand over to Mr. Mahan, because he knows the details of this, me not yet.
So receivers are typically...
Now we know why you were brought in. You're here for this one.
The receivers are typically normally for buy-to-let properties, so we'd put a receiver in a buy-to-let. In some PDH cases, the original borrower has vacated and there may be tenants involved in the PDH have moved in. The property has been rented out, so it would be in those circumstances where a receiver may be appointed to those cases. So it wouldn't typically be for a PDH private. Because
to be fair, your opening statement said you're not transferring PDHs to vulture funds. You're managing it out in a way that I think some other banks at least have not been doing, and I think that is to be commended. So that really, I suppose, the question was, why was that the case? In terms of the legal proceedings against the in terms of question 8, we have a number of cases there in terms of 58 legal proceeding proposals and 39 receiver proposals. Why is that the case there?
In some cases there may have been difficulty around, for example, title on the property, so we may have had to go a legal route for a buy-to-let property. So question 8 is in relation to buy-to-lets, so we may have had to go through a legal process to seek an order in relation to that, to obtain.
And in that case, a receiver wouldn't be appropriate, or couldn't?
The receiver may not be appropriate, no, because there may be a technical issue or a legal issue in relation to the case.
Okay, just I suppose I acknowledge your comments in terms of the tracker mortgage examination and in terms of your role or your bank's role in it. Where are we in terms of your bank's role in that? Now, is everybody resolved? There's probably a few customers you can't track down. Where are we in terms of the trackers?
We have, at the end of the first quarter, 3,737 mortgage cases. This represents 2,976 customers that were identified for redress and compensation. 96% of those have received redress and compensation, and 4% of cases we are still in the contact of trying to find the customers. So everyone has been written to, but we have part of that mail has returned or we cannot find the customer, but we will continue doing efforts to do so. Barry, you know all the details on those 4%.
So for that 4%,
How many is that? Sorry, just
it's 149 different cases, and it represents about €5 million. So what we're doing is, for about half of that, it's money is going to be held in escrow, and we continue to chase down and understand where, from a tracing viewpoint, how to get the mail to the customer.
Okay. In terms of your, just I suppose, final question, Chairman. You have about 17,000 trackers out of about 71,000 home loans, which is about 24%. Most banks were 40%. Your reason for being lower is that you had less trackers offered in the first place, or you have managed to get people off the trackers, or why is it that you're below the industry average?
So that would go back to the kind of IIB time when the bank was lending. It's purely the quantum of lending it did at any particular point in time. So it wasn't as a result of, it never was
Policy.
up at those high levels. It wasn't a policy decision. It was just a quantum of the lending it did at the height of the market.
And it just did less trackers than most of the people
It just did
at
less
that
than
time?
others at that particular point in time, yeah.
Okay, well, Chairman, I'll leave that for now. Thank you very much. Appreciate it.
Thank you very much, Senator.
Thank you, Cathaoirleach.
Conway Welsh.
Thank you, Cathaoirleach, and thank you for your opening statement. The non-performing Irish buy-to-let mortgage was 0.9 billion. Yeah.
1 second. I have to leave the meeting. I have another meeting on at the same time, but I'll be back. And just to inform you that the two main spokespersons, Deputy Doherty and are in the chamber doing questions, leaders' questions. So there's a bit of a change around the personnel, but
We're trying to multitask.
So I'll have the floor to my... Does that mean I can have a half an hour?
You can have as long as I give you.
Thanks, Cathaoirleach. So the 0.9 billion is the Irish, the non-performing Irish buy-to-let portfolio, yeah? And just how many mortgages does that... How many mortgage holders are contained within that 0.9 billion? The non-performing Irish buy-to-let element?
Yeah, we've got a total of about 143 million non-performing buy-to-let mortgages, and that equates to 530 agreements.
530. Is that what's been sold off? The ones that were... I'm trying to get at the ones that were sold last year.
Apologies.
That's
I thought you were looking at the live. Yeah, sorry, it was 0.
Yeah.
The full portfolio sale to Goldman Sachs was 1.9 billion.
That's
that broke down as 0.8 billion corporate non-performing loans, 0.9 billion Irish buy-to-let non-performing loans, and 0.2 billion performing and non-performing UK buy-to-let.
So let's have a look at the 0.9 billion. How many mortgages did that? How many mortgage holders were impacted by that? I
don't have the split of that. I know the overall split was about 5,100 loans, which equated to about 5,800 properties in totality for the transaction. I don't have the split of the buy-to-let part itself, but I can get that.
I think it's important to examine that, so if you could let the committee have the exact number of mortgages impacted from it, because sometimes the buy-to-lets can be just dismissed as, superfluous, but has a real impact on people's lives, particularly where people maybe bought one or two properties, maybe one as a instead of a pension or whatever that they were guaranteed at that time. So they're affecting their whole family loan circumstances. And you talk throughout the opening statement around the vulnerability. Well, a lot of the people I'm coming across are extremely vulnerable, and people whose mortgages have been sold and sold off. So would you have a figure on what was the write-down of you selling that 0.9 billion? What write-down did you give to, was it Goldman Sachs you sold them to?
Goldman Sachs, yeah.
Yeah. So what write-down did you give them?
I don't have that information. We wouldn't provide that information. It's commercially sensitive in relation to the transaction.
Yeah. Well, you see what's happening is these mortgages are being sold off. I know one, just take one for example, one in particular. So the Vulture Fund buys it for less than 70,000. Then they sell it for 170,000. So they've made 100,000 straight off. And then the fees for the receiver and the legal fees and all that take another 35,000 from it. And then the Vulture Fund goes back to the mortgage holder and demands that, say in one case in particular, say 20,000, so demands an extra 20,000 on top of that. And what's difficult for me to understand is, why could that not be negotiated with the mortgage holder in the first instance? Like, there's vulture funds. You're facilitating vulture funds by the sell-off of these non-performing loans, or what you call non-performing loans. In some cases, split mortgages, and I dispute the definition of non-performing loans. But so they're already making 100,000 out of it, and then they want a further 20,000 as well. Like, the unfairness that's built into that. And then, so the banks are just leaving, banks like yourselves are just leaving mortgage holders to the mercy of vulture funds, who not only charge them for the receiver's fees, the legal fees, make a huge profit, and then go back for more. I suppose the definition of a vulture is to go back and pick the carcasses. And what's happening is that the carcasses of these vulnerable people that you talk about in your opening statement are being picked and being picked by vulture funds, and it's having an enormous impact on the family lives and the families that I'm dealing with. So that's why I'm interested to know why the write-down, that how many loans have been impacted, and the write-down that's been given to the vulture funds, who, as you know, most have come under Section 110, so don't even have to pay tax on this.
Well, again, you're referring to indeed the sale of non-performing loans that we closed last year, Senator. So, specific case you refer to, of course, I don't know. I cannot comment on that. The position that we have taken, and this was the customer group that I was referring to in my opening statement, is basically not to sell primary dwelling loans, so mortgages involving primary dwelling loans. This is quite an important decision, because you will have seen that our percentage of non-performing loans, and we basically apply the definition of the European Banking Association, European Central Bank, so it's a standard definition, not one we invented, that we take responsibility of running a quite high percentage of non-performing loans, but it is the logical consequences of treading very carefully in terms of primary dwelling homes and having a very extensive engagement process there. So I can only repeat what I said in my opening statement to that point. As for the details on the number of mortgages indeed involved, or deals behind the buy-to-let sale last year, we will give them to you separately.
So that figure is 4476 is the number of buy-to-let agreements.
4476. So that's
the number of
almost 5,000 families that are affected. You see, when you just talk about the dwelling homes, if you're talking about somebody who just has one property, it really is one and the same as them having a dwelling house, because it's impacting on their everyday living. And I know people who are absolutely distraught at the way they're being dealt with by vulture funds. Once you sell off, say, to Goldman Sachs, is that your responsibility just completely? Is there a line drawn under it? Do you ever look to see what's happening to the people who you've sold the mortgages from, or do you feel any responsibility?
Well, if in case of a sale, of course, indeed, we have no longer any contact with the customers involved. It is in this case Goldman Sachs, so the buyer, the fund that buys the loan portfolio, that takes over the full control, and they have no reporting obligation towards us, so we would not have indeed any information thereafter.
And you did sell family homes in 2017 as well?
No, we never sold family homes. We never sold private dwelling homes.
And just maybe to come in as part of the sale to Goldman Sachs, when we issued letters to the borrowers, if any borrowers came back to advise that the buy-to-let had become their PDH and could evidence that, they were excluded from the transaction. So there was an opportunity for customers to engage with us at that point.
So we obviously have an obligation under regulation before we sell a loan. We have to write to customers and give them 60 days notice. So if customers came back and said, you know what, I'm actually living back in this house now, recognising these are families, we took them out of the transaction to Goldman Sachs. So we only sold in the case of buy-to-let non-performing loans where the period of time of the loan being non-performing was quite extensive.
You know, these people are in real difficulty now. They're in real difficulty with how they're being treated by the vulture funds. And I think all of the banks, including yourself, have a responsibility for that. So you don't track it. In terms of the legal fees and the receiver's fees, in the repossession cases, you charge them to the mortgage holder as well?
If we're going through a legal process, we accrue fees in line with the loan agreement onto the associated account. Ultimately, that will be decided by the courts. So if the court says that KBC is not entitled to those legal costs, they'll then be reversed off the account along with any associated interest.
So you go by what the court said. Are you going to sell off more mortgages?
We are not selling off any primary dwelling home mortgages, no. We have a transaction in process that is about to close, which are the remaining corporate loans, performing corporate loans, because we want, it was our strategy, it's our strategy to recenter entirely on retail and micro SME business. So this is the last sell-off that we, or the sell-off that we are finishing now, so performing corporate loans.
But they're being sold to Bank of Ireland as a continuing strategic provider of corporate loans in this marketplace. That's the difference in that transaction.
You see, you use all the right language, all the language in terms of your responsibility to citizens and all of that, and being concerned about the vulnerability of people. But there's people out there like who are absolutely distraught by the way that they're being treated by the financial institutions such as yourselves.
If I may, you know, we have, if you look at the live mortgages we have, it's 55,500. I'm going to rounded figures. 85% of that are people that continuously pay off their mortgage quite normally. We tend to forget about them, but they work very hard every month. It's not so easy, but they do it. 5,500, that's another 10%, is performing perfectly under some kind of restructuring, a MARS solution. So customers engaging with us, and they are meeting those terms. That leaves, and that is, I think, where you're pointing at, and I fully understand it, because these are very distraught and difficult circumstances. 3,300, so 6% essentially of the book, which I would say is the really, you know, the group of customers in gravest difficulty, and half of that group engages with the bank. So we have a communication we try to work through. So the issue is that, of course, you have a limited group. It's 1,500 customers where there is absolutely no communication engagement. And yes, we realize these are very difficult circumstances, but if there is engagement and there is communication, what we're trying to say is solutions are found, and we have put you know, a whole range of resolution options, so temporary solutions in place to get over that difficult period. It is possible, but that does require, of course, that both parties have that communication and look for that solution.
I mean, I'm dealing with people all of the time who are communicating and trying to communicate with banks, and I can tell you that that is not the case. But you would say the same as every other bank that's coming. Can you tell me what's the difference between buy-to-let and corporate?
Buy-to-let loan is typically a residential property, whereas a corporate loan would be an SME or a shop or a pharmacy or something like that. It'd be an actual business loan.
All right, so the buy-to-let you treat separately
property,
to the
It's typically where the examples you spoke about, where somebody has bought a property and they're renting it out effectively, and the income for them is the rental income on the property.
And the corporate is just based
it's your
on...
business, yeah. It's a business, like it's the business that you're running. It's corporate. It's nothing to do with residential
No, but there's a difference between buy-to-let, is there, and corporate in terms of your own distinction. How much profit did you make last year on the Irish operation?
15 million was the first quarter of this year.
The number for last year was
last year.
162 million, of which about 111 million related to impairment write-backs,
111?
related to provision write-backs.
Right, okay. So,
Provisions.
okay, so how much tax did you pay? How much corporation tax did you pay?
I'll take the fit if you want. Yeah. The total tax we paid in 2018 was 70 million.
Corporation tax?
I don't have the figure, Barry.
In effect, corporation tax, in regard to, we haven't paid corporation tax last year.
What? Sorry? What?
There was, I don't believe there was any payment in the context of corporation tax last year.
So you didn't pay any corporation tax?
We have a deferred tax asset, so that we'll, when that is run down, we will start to recognise corporation tax at that time.
And that will continue, what, for another 8 years?
Under the present projections, we assume this will be absorbed by 2026. Yeah.
So another, what, 8? Yeah, 8 years. It's good if you can get it, isn't it? Just following on from the repossessions, and when a court order is granted, so you go into court to get a repossession and the court order is granted, and then that court order is executed and you have a state representative who takes possession of the property, who engages a private security firm. Do you engage, just explain that to me a bit then. For you to get the property back, it's the state that executes that and that engages the private security firm. So where are you in all of that? I mean, do you pay the state, or is it the state who lies at the loss of the expense involved with it?
I think you can go into the details, but of course, KBC never executes the court order. The court
Yes.
makes a decision. The registrar is in charge of executing that. We work with an Irish asset management firm to manage all properties that would be repossessed. And that asset management firm can, if it sees the requirement, of course, engage a security firm to be in the dwelling if required. If that firm would be, I would say, appointed by the sheriff, I guess the cost would still be carried by KBC Bank. I don't know.
Cost for the security, for when we take the property into possession. So the sheriff or the county registrar executes the repossession order, as you said. That's separate to the bank. That's before the bank gets the property back into his possession. When there is vacant possession, at that point the sheriff or the county registrar will hand over the property to KBC and we will sign for the property. At that point we may put in security into the property to secure it, number one, and also to facilitate customers in retrieving their private possessions in the subsequent period.
So we as citizens pay for the security and the repossession up to the point that the repossession has been achieved, and then you take over the cost of it from there. Is that it?
We pay for the for the security of the house after we've taken it back. I can't speak for the court services or up to that point, but from our point of view, we will pay for the security of the property after it's been taken into KBC's possession.
But obviously, as citizens, we pay for the courts and pay for that service. So we actually pay to get the property back to the bank.
That's correct, yes.
Well.
Can I just come in on that point of view, just to tease out that same point, if you don't mind, just asking in terms of, are there no court costs that you have to put up fees? And I mean, obviously, I'm assuming from what Senator Conway Walsh is questioning and the answers is that when you go to court, you are looking for somebody to be evicted, I suppose is the only term really for it, because they have not been in compliance with the agreements that you've had. But presumably you have to put up fees. I mean, the state is not paying all these costs. Presumably the security that the sheriff or the county registrar employs ultimately gets billed back to you guys, or does it not?
I don't think it gets billed back to us. I think as we go through the process...
Are there costs involved in engaging the registrar, though?
The registrar is a state, that's a state run, it's the court services.
But he doesn't charge you for those services he provides?
He doesn't charge for those services, no.
Okay. Great, Senator Cormac.
Can I get a job in banking? Okay, I want to go back to the prevailing rate and the fact that you used variable for the term tracker. Was that interchangeable at the time? So the prevailing rate, say the contracts in 2005, and at the end. So at the end you had your fixed rate that would roll on to a prevailing rate. What is the difference between the variable rate and the prevailing rate at the time? Because if someone had a one-year fixed rate, say from 2005, and that ended in June 2006, the prevailing rate kicked in then, say, in July 2006, which was the rate, the 3% plus 1.4% for July and August. And then 2006, that changed again, but was linked to the ECB rate. So surely if something is linked to the ECB rate, it's a tracker rate. It's not a variable rate. Can you just maybe tease that out a bit for me?
I'm not sure the specific case you're referring to, but typically when customers would have rolled from a fixed rate to, if they were on a tracker rate prior to that, they would have rolled to a standard variable rate at that point in time. That would have been considered the prevailing rate at that moment, unless they had within their contract a right to a rate that included a margin plus an ECB rate. So it would depend on the individual contract of the customer at that period of time.
So you're saying the prevailing rate was the standard variable rate and not a tracker rate?
It would depend on the individual contract that the customer would have been on.
So for somebody who had a contract, are you saying somebody who had a contract on that, there's people that are being deemed as being not impacted by the variable, by the tracker mortgage debacle, who have had to take their cases to the ombudsman, because there's confusion between what the variable rate was, the standard variable rate, and the tracker rate.
As part of the tracker mortgage investigation, we recognised a large grouping of customers who were on a fixed rate and who ultimately are now have been placed back onto a tracker rate. And through the examination, we identified all impacted customers, and at this moment in time, we don't have any disagreement with the Central Bank or any other body at this moment in terms of rates or challenges to that.
But you have from individuals that are having these cases examined?
We have certain cases with the FSPO at this moment in time, a small number of cases, and we work as best we can with the FSPO and the individual circumstances of every case.
But if a rate is linked to the ECB rate, doesn't that make it a tracker? You're tracking the ECB rate for that element of it.
Again, it comes back to if the contract per an individual customer indicates that it would be a margin plus a very specific ECB rate, then that's what the customer should be on. If their contract outlines that, then that's what we place the customer on.
So you had, at that time, you had a fixed rate, a variable rate, or a mix and match of the two, is that right?
So you would have a fixed rate rolling to a variable, or a fixed rate rolling to potentially a tracker rate, yes.
A tracker. So just explain to me the difference between the tracker and the variable again. The standard variable rate.
So the standard variable rate would have been the standard prevailing rate available at that time, and the tracker rate would have been dependent on the margin plus the ECB rate at that time.
So if it was linked to the ECB rate, it would be a tracker, yes?
If that's what was in the contract, yes.
Right. Okay. Thanks for that. I just want to talk to you about the lending. A lot of people I'm coming across again are where their mortgages have been sold off. There are, and they might have a good loan to value ratio, and they are being not being allowed any other finance. On that, what's your policy where you're dealing with a customer who've had their loans sold off and have a healthy portfolio, if you like, but they're sold off? But in terms of your treatment of them.
So if it's a new customer, say it's a customer who doesn't have a relationship anymore with KBC, so
Yes.
either that in those
Yes.
buy-to-lets were sold, then obviously we'll assess their individual circumstance at that point in time and their ability to take out any mortgage. And indeed, if they were a customer of another financial institution and their mortgage had been sold and they came to a KBC for additional debt, then we would look at it on an individual basis. So people would not be disadvantaged because their loan had been either sold to somebody else or were with another provider. It's all down to the individual circumstance of that customer, and indeed if they're buying a property, the value of the particular property they're purchasing.
So you can say with certainty that there isn't any policy or any written communications within the bank in regard to anybody whose loans have been sold.
Yeah, there's no policy to say they cannot borrow again.
Okay. Now, while there's been some reductions in the fixed rates on offer, your standard variable rates remain stubbornly high. Now, we've seen this with other banks too, where customers are encouraged to move to a fixed rate. Obviously, they should where they can, but there's a danger that banks are effectively removing an option of choice of a variable rate from customers in the long term. And my question, I suppose, is that your goal, to get everybody on a fixed rate, to move from the variable rate?
Well, we have a commercial choice indeed, that we have a preference for customers buying some security and going to fixed rate. But again, you have an option going from 1 year fixed rate, which is not very long, to the optimal to the longest offer that we have is 10 years today, and maybe we will extend that further. So there is a wide range of options, 1, 3, 5 year, 10 year fixed rate, so that is I think very customer friendly. And variable, well, the nature of variable, that is variable. We have a variable offer in the market, and clients can always avail of that. We see clear preference of customers today. I think in the new mortgage production year to date, about 94% of customers have opted for fixed rates. In our case, the most popular product is the 3 to 5 year. But given the low level of interest rates, I don't think it is unwise for customers to seek for some type of stability. But again, this really depends on individual customer preferences and every person's individual situation.
Okay, thank you. Thank you, Senator Carwash. Have you any? Are you finished?
No, I would just ask you, maybe in your new role, and I wish you well with your new role, will you have a look at the prevailing rates again and what has happened in 2000 and 2006 and people's contracts there? Because I do believe there's an issue there in terms of the prevailing rates and what was described as a tracker and a standard variable rate. It is an issue I would ask you to look at. Thank you.
Thanks, Senator Carwash. Deputy McGrath.
Thank you, Chair. And if I repeat any question that's already been asked, then just let me know, and I won't continue. And apologies, I was covering for the party leader in the chamber, so I missed the earlier part of the meeting. And I'd like to welcome all of the witnesses and to wish you well, Mr. Robin. Is that how it's pronounced?
That's correct. Thank you.
On your tenure as CEO of KBC Ireland, and you're very welcome to this country, and hopefully the bank's commitment to the Irish market will continue and deepen. And perhaps if I can maybe start with that question, because over the last few years, as we emerged out of the banking crisis, the wider economic crisis, all international banks would have re-examined their presence in countries like Ireland, and we did see the departure of a number of international banks from this market, unfortunately, because it reduced competition competition. So can I just ask you, in relation to KBC's commitment to the Irish market, and to give you an opportunity, hopefully, to reaffirm it?
I can only confirm it, Deputy. That is why I'm here. This is my mandate to keep growing the bank and the customer base. And our strategy remains the same, so invest in innovation to develop a ever more convenient and transparent banking model, and convince more and more Irish people to give us a shot, to try it, and indeed to be the competition. We are not an incumbent. We are the smallest player, I would say, today in the market. But we have the support of one of the strongest and best capitalized financial groups in Europe. And KBC very much believes in Ireland. We think the overall outlook for Irish economic growth and where society is going is favourable for this business model. But it is, of course, a work of every day to keep developing that, and I think competition is good.
And your core offer to customers, the mortgage market is where you focus, isn't that correct?
Well, retail banking is where we focus, and of course today the strongest contributor to our model very much is mortgages, but we have 300,000 clients, and of course a very large part of that also does daily banking with us. And we are gradually expanding the product offer, and in the years to come we will further do that. And secondly, we will be stepping up as we go forward also this approach, the service approach, into the micro SME segment. So the small companies in Ireland is also part of our target group to be.
And what's your presence currently in that part of the market, in business banking, lending to SMEs and so on?
It is very small. It is incipient. I think we have about 10 million euros exposure only. But we took a position of 50 million euros in the strategic lending program. I'm probably quoting the name.
Strategic Banking Corporation of Ireland,
Exactly, that is the program. That is overall 300 million, and we took a share of 50 million in that to support our growth ambitions. So we believe in this segment, and it is very much also part of overall KBC Group strategy to be present in that segment. So there is room for us there, I hope.
Okay, so that is very much a target market. Absolutely. In your business model for future development. And in relation to the mortgage market, what is the bank's current market share of new mortgage drawdowns, let's say? Where are you at?
It's around 11.5%. Yeah.
Okay. So you would be the smallest of the five main lenders in the retail banking space, but
that is correct. Not
too far off Ulster Bank, Permanent TSB, and then the two pillar banks would be well ahead in the region of 30% each.
That's right, Deputy. We've typically had about 10% of the mortgage market historically, so we think our new business lending is about where it needs to be from a market share perspective.
Yeah. And just you've outlined in your opening statement that the net profit net profit of 15 million after tax and impairments for the first quarter of this year. And was the first quarter representative of the trend that you anticipate through 2019? So pro rata, that would be 60 million profits after tax and impairments in 2019. Is that the area that you're in?
Yeah, we never give guidance, Deputy, on earnings. We're part of a publicly quoted group, so we don't do this. But we're quite satisfied with the results of the first quarter. They were strong. Of course, the net profit was less than last year. It was 54 million euro last year. But what this represents is now basically a picture reflecting our position as a pure play retail bank and then soon to be micro SME bank. Because you know that we basically are in the process that is nearly finished of disengaging from corporate lending in this market. Yeah. And so part of the changes you see there year on year are reflected by this, because the corporate book is basically nearly sold off. We're in the process of finalizing that this quarter. Yeah.
Okay. And can I ask you in relation to the mortgages that are in arrears, and you've provided us with a lot of data and details of the restructuring arrangements that you enter into and so on. But earlier in private session, the committee agreed to write to all the lenders just to clarify their policy in respect of the application of legal fees to mortgage accounts that are in arrears. So prior to let's say a repossession order being secured where a legal letter, a threatening legal letter has been issued, or where court proceedings are about to commence. What is the bank's policy in relation to applying legal fees to those mortgage accounts in arrears? Because some lenders seem to be doing it. It's an issue I raised by way of parliamentary question with the Minister, which was passed on to the Central Bank, and the position seems to be unclear as to what the banks are entitled to do or under the Mortgage Arrears Resolution Programme. So I don't know if any of you have that level of detail as to what the bank does in respect of legal fees.
Cases that are going through the legal process,
yeah.
where we've actually got into that legal process, the bank does accrue legal fees in line with the loan agreement with the associated account. Ultimately will be decided in the courts, and when the court decides that KBC are not entitled to those legal costs, they will be reversed off the account along with any associated interest.
Okay, so the legal fees that are incurred are actually applied to the borrower's mortgage account while the legal proceedings are ongoing. So would that be for every legal letter issuing, or would it be just where there is a court appearance, or can you just talk us through?
It would be for any legal costs that are incurred. So if we're using an external legal, so a solicitor to issue letters, yes, those costs would be accrued onto the account, yes.
Okay. And the basis of doing that, is that set out in the loan documentation, or is it provided for in the Code of Conduct or the MARP, or where is the basis that allows you to do that?
It's within the loan agreement. You're correct, it's within the loan agreement. With that associated account, it's outlined as part of the loan agreement.
Okay. And is that aspect of the relationship regulated? Does the Central Bank, to your knowledge, have a view on that, or have they issued guidance as to what is allowable? Is there any limit on the amount of legal fees that can be applied? But where I'm going to with this is that if you have a borrower that is cooperating and is paying what they can, they're trying to negotiate a restructure arrangement, but they continue to receive letters from the bank solicitor, then it's just compounding their problem. Yeah. In that the amount that they owe is growing as a result of legal fees, perhaps not significantly, but it's growing. So I'm just trying to understand what is the bank's policy, and at what point do you invoke that clause in the loan contract that enables you to start applying legal fees?
So maybe if I could separate, if there's a borrower that's engaged with the bank and is paying what they can, and we're trying to put them through a resolution option, we won't be putting legal fees onto that borrower's account. Okay. And we would encourage all borrowers to engage with us to that process. Legal fees would be applied where we're actually going through the legal process and we have no engagement from the borrower, and that's been going through the legal process, as you said, probably looking for an order for repossession. So it's more at that late stage for non-engaged borrowers. If somebody's engaged with us, we won't be going through a legal process. We'll be trying to get them onto a resolution option.
Okay, so you have two tests as such, that there's non-engagement, which presumably translates into no payment being made on the mortgage, and secondly, it must be as part of the actual legal process, which presumably would be at the court stage.
That's not to say that we wouldn't have a case that has gone very late in the legal process and the borrower re-engages very late. So we're open to re-engagement at any point in the process. So we've had borrowers that have re-engaged with us when we've received an order for repossession, for example. So we may have gone through a legal process at that point. So we could have been incurring legal costs going through the legal process, but then a borrower can re-engage very late. But earlier on when I talked about if borrowers engage us up front, we don't go down a legal process. Anyone that engages with us and we're trying to get them onto a resolution option, we won't be going down a legal process at all.
And your understanding is that the application of such legal fees, which is provided for in the loan contract, doesn't in any way contravene any central bank code or rule or the provision of MARP or anything like that?
That is our understanding.
That's your understanding.
And we're in engagement with the central bank. They've requested certain information which we've provided.
Yeah, because as I say, I did put down the Dáil question, and the response from the Central Bank was to the effect that they were examining whether the application of legal fees was in compliance with the MARP process. So we'll see where that one leads to. Can I just ask, given that the mortgage market and the housing market is central to your business model, have you any observations on the housing market currently? I mean, there are limited opportunities for first-time buyers to purchase properties. Supply is increasing, but when you strip out the houses that are quite rightly being built as social houses by local authorities, by approved housing bodies, the entire developments being bought by REITs or investment funds, and then you've one-off houses in rural areas that are being built by qualifying planning applicants. So the number of properties actually available is quite small, and I'm sure you'd like it to be more, given that this is the key part of your business. And then there is an affordability crisis. So supply is very tight, but the cost of building has risen in Ireland very significantly in recent times, and I don't think it's as simple as diagnosing it as a supply problem. There is an affordability problem as well, and not all new developments are selling very quickly. They're not, because the homes are expensive and we have the macroprudential rules. So what are your observations on the market currently, and where do you see it going?
After 7 weeks in Ireland, it would be presumptuous of me to claim to be an expert and answer that very complex question, comprehensively. What we do observe is, I think, at the core, it's very clear that there is, of course, an imbalance between offer and demand. I think it's undeniable. Our economists estimate that where the market is today, it should absorb 35,000 units, newly built units per year, and we are on the path probably this year to add 22,000. Last year it was about 18,000. So you have an imbalance, and that's been going on for a while, and it's building up, and the economy, of course, is doing very well. Unemployment is at an extremely low rate. So you have that tension, and that leads, obviously, particularly in certain areas, and if I look at the Dublin area, which is very important in our business model, to prices that pose a problem of affordability. So it is a clear fact. As to your remark on the prudential rules, quite honestly, here I think it's good that the Central Bank of Ireland puts limitations into the market. I think one of the big lessons coming out of the previous crisis, not only in the Irish market but in all the countries where we are present, we see central banks intervening. The definitions of the rules, of course, and the levels depend on the local circumstances, but I think this is a good evolution, because mortgage markets left on their own, particularly if the underlying real estate markets are imbalanced, will get unhinged. So I think this is good.
Okay, Chair, I think you covered the issue of the number of borrowers on the standard variable rate. I think that was covered earlier on, which is quite high, just my observation. So in terms of total number of mortgage sub-accounts, 32,680 out of 79,301 under question 9. So that's 41% of your book in account number terms. And then did you split out the number of those that have the discount by virtue? You did. You provided that.
Yes.
And did you clarify in relation to those who have an LTV of above 90%? Is there any opportunity for them to reduce their rate? Was that dealt with earlier?
Yeah, so we didn't actually specifically deal with that one. Just to answer the question, so we do have about 2% of those standard variable customers who have the current account discount, so about 630 cases.
2%?
Yeah, only 2%. About 14% of them, of standard variable customers, have actually opted for our new business variable rate. So we've spoken about this at this committee before, where we write to them regularly. We give them options to reduce their rates. So about just over 5,000 of those customers have actually opted for a lower rate. So the SVR number would be higher if they hadn't chosen to reduce their rates. But the current account, the existing customer base, still only about 2% of those standard variable rate customers have taken out a current account, despite constant engagement with customers. And to put that in context, 9 out of 10 new mortgage customers who take out a mortgage with us today take a current account discount. So there's just different responsiveness in different customers. To answer the question on negative equity, yes, we do have products for customers in negative equity, for example.
Or even 90 to 100%.
Or 90 to 100, or 90, over 90% maybe is a better way to answer your question. They can fix for 2 years for as low as 3.70%. So if they're on that standard variable rate of 4.25 today, they can reduce that to 3.7%, taking, for example, a 2-year discount, 2-year fixed rate with the current account discount. So loads of options for customers, irrespective of their loan to value, to take different products with KBC.
Okay, and so you're saying, sorry, Chair.
It was just a point I think that you were making, just for your benefit, Deputy McGrath, is that relatively speaking, these are the older customers. These are the products that they've kind of broken the back on their mortgage, and it's, while they should change, of course, they should be getting a saving, it's available to them, all they have to do is go and get a valuation.
Yeah, that's right.
But relatively speaking, it's to most of them, it's not the biggest thing in their lives anymore,
Yeah.
and it would be a much bigger saving on a new mortgage, but it's still on average 1,400. But equally, we pointed out that in some cases that could easily be 4 or 5 grand if the amount is in excess of 80,000 outstanding.
That's what's happening.
Okay, so for those with an LTV of
90%.
greater than 90%, the best you can do for them is a fixed rate of 3.7.
3.7 for a 2-year
it's a
fixed
2-year
rate.
fixed rate.
Yeah.
And does that include the
That includes the current
0.2% discount?
Yeah.
Okay, so 3.7 or 3.9.
9 if they didn't take the discount.
Okay, and then I assume that as somebody's LTV improves, there's no limit on the number of times they can move down the LTV band.
That's correct. That's correct.
Okay, that's fine. Yeah, I leave it at that, Chair, and again, apologies for being late.
No problem. Thank you, Deputy McGrath. Deputy Murphy.
Well, thank you very much, Chairman.
By the way.
Thank you very much. And sorry again, I'm late, but I had to attend the chamber. I want to welcome the people from KBC Bank here today. In relation to evictions, I've dealt with one of your staff who has been very helpful, I have to say, and went out of his way to deal with issues. Just a little bit about your bank. To be honest, I don't know much about you. How many people have you employed in Ireland at the moment?
1,300.
1,300. So you're a significant employer in this country. And how many branches have you?
16.
Okay. There has been quite a dramatic fall in your profits recently. Is that correct? What do you put that down to?
Well, we published a net profit after tax and impairments of 50 million euros in the first quarter compared to 54 last year. The main difference is that in the meantime, so last year we sold off 1.9 billion euros in loans. Essentially, the bulk of that were corporate loans, and then the buy-to-let portfolio. This was a non-performing portfolio, and we were benefiting still last year from provision write-backs on that portfolio since it was improving. So that those provision write-backs are no longer there. We are now, since this year, a pure-play retail bank, with the exception of about 260 million of performing corporate loans, which are in the process of being sold off in the present quarter. So the business model has changed there.
Just come in, sorry, Deputy. The main the reason you made profit last year is because of the write-backs. And in fact, without the write-backs, you wouldn't have made profit. Is that correct? On an operating basis.
The statutory profit last year was 162 million, of which 111 million related to impairment write-backs. So
Without that, you'd be down to 51. Okay, thank you.
So this is the main driver.
Okay, thank you for that. In relation to evictions, and Chair, I can assure you I won't be mentioning individual situations, but you and most people know here I went through a very difficult situation in my own area. What happened?
Kind of addressed it a little bit already, but you're very welcome to continue.
Okay, well, I'll keep it limited because I do understand that there are legal proceedings ongoing at the moment. Are you satisfied that in relation to evictions that maybe I won't say that you get it right, but that you do everything possible to avoid that situation happening?
Yes, Deputy. I have to say I had a personal look at that, at how we approach, non-performing loans as one of the first things I did when I arrived here, because I know how sensitive and important the issue is in Ireland, and also for KBC Bank Ireland. And our policy has been and remains to really look for every possible option to individually engage with every customer, because this is people's and people's houses, so it's a difficult situation always. And if you look back over the period since 2009, we went back that far, really 90% of people going into payment difficulties, arrears, have ended up with a restructuring solution. Today, if you look at, I gave the statistics before, you have 55,500, I would say, live private dwelling mortgage cases. 85% of those normally paying, working very hard to pay every month. 10%, 5,500 people performing under a form of restructuring, so MAR solution. That is the process. And then we have about 3,300 customers. This is the really most difficult part, that go 90 days arrears or more. And still in half that group, we are able to engage and find solutions. And then you have the remaining group where indeed there is no contact, there is no engagement. We cannot reach the client, we cannot talk. So this is the part where it's difficult. As long as communication is going on and there is a dialogue, we will find some kind of arrear solution. It's in everybody's interest, certainly also in the bank's interest. So that is the process. It is very thorough. And so the legal process is the very, very last place where we will go. If nothing else happens, then of course the independent courts and the legal system are the only way to find some kind of closure. But this is only after a very long process of many years. And even if you go to the legal process, it also is a very lengthy process. And at any time in the process, we are open, if the customer is willing to re-engage, to go out of the process again and to find a common solution. So it is a very thorough process. I think over the years we have learned a lot, and the options available have expanded. And gradually, I have to say also, if you look at the people that are under a arrear solution, you do see a number of them, and that's increasing, moving out and improving and getting, they have come through this difficult situation. But of course, there is a part of people that are really in a very difficult situation, and if there is no dialogue going on, then it's very difficult to advance. But yes, I think our process is extremely thorough, and the attention we pay to it here is, I must say, has impressed me arriving here.
Mr. Robin, I wouldn't expect you to know all about the Roscommon eviction, particularly the Strokes eviction, which happened down the road from me. But would you accept that you've lost face nationally over the way that was handled?
Deputy, as you mentioned yourself, I cannot, of course, not comment on specific cases, particularly cases where there is a legal procedure going on, and I believe in this one even a criminal legal procedure. We have a very rigorous process when we go also into the legal cases. And again, as I said, this is really the ultimate step of a very long process. If nothing else works and there is no dialogue ongoing, then we would end up in the legal process. And we scrupulously adhere to all the legal rules and policies and regulations there. And this is our approach in every single case.
Okay, well, look, the event is water under the bridge to a degree of how it was handled at that stage. Again, I want to put it on the record here and I'm not going to mention the member of your staff, but from Galway, who was extremely helpful, and when I rang him, did intervene in that case. But for whatever reason, the family decided legally they weren't going to accept the offer of negotiation. But can I ask you to comment on the security people that you employ to carry out the unfortunate work of evictions? Have you a comment to make on it?
Well, the process is that we work with an Irish asset management firm, so that if a building, in this case a house, is repossessed, that has to be managed. And of course we outsource that to a professional asset management firm who, if they see the need or the requirement, can indeed also hire other agents. So, for example, security firm. This is how the process works. So we would not be directly doing that, but of course what we do is a due diligence that all the companies we work with have all the legal permits and are fully licensed under Irish law. This is of course a due diligence that we do, and this is a duty of care that we have. This is how the process works, yeah.
Can I just come in? Because we did have a little talk about this before, and it was in relation to the registrar and the role of the registrar, and that maybe Mr. Mahan, it might be more appropriate to you as asset recovery. Can I just tease? I'm not talking about this case particularly, but just generally, if you get to the end of the journey where you feel you have to issue court proceedings, and the sheriff then gets a repossession order from the court. Is that exactly how it works?
I can walk through it. It would be useful, yeah.
But the people who take possession of the property are doing it. Obviously, you've instigated the process, but it's the sheriff and his personnel who he has hired, as opposed to the people you have hired. So the people in any eviction that you are involved with at the point now, you did mention that once the sheriff hands you the property back, you then have to hire security to mind the property once he's handed back to you. And the actual process of eviction, they're not your people you hired, they're people the sheriff has hired. Is that correct?
The lender does not execute the repossession order. Okay. It's done by the sheriff or the county registrar. And the county registrar will arrange for whatever support is needed, so there can be locksmiths, etc. on the day. That's done by the county registrar and the sheriff. When the property is vacant, it's then handed to the bank and we will sign for that property. At that point, we will put our security in to secure the property, but also to arrange for, if the previous occupants want to take their belongings with them, or to arrange to have their belongings taken away. That's why we have a security team in place.
Okay. I think it's a matter of clarity here. Who recommends to the registrar who is to carry out the eviction? Maybe I can put it that way.
That's up to the state representative to make.
So you're saying the bank have absolutely no role in who actually is employed to carry out the work?
It's up to the state representative.
No, but I need a correct answer.
We don't advise the court services.
So you don't have any role. I don't want the word we don't advise. Does the bank have any role in recommending or having any say in who carries out the eviction? I'm not talking about the advice. I understand fully where you're coming from. Does the bank, or any bank for that matter, have a role in who is employed to carry out this work? And I would like a direct answer to that.
We can't speak for I can't speak for the court services. We only look after the property when it comes back into our possession. It's up to the sheriff and the county registrar to make the necessary arrangements to execute the repossession order as provided by the courts.
To the Chair, I understand that, Mr Mahan, fully. I ask the question again. Does the bank, or any bank, not just KBC, have any role in who is employed to carry out the eviction?
We don't advise the court services.
No, you're using the word advise. Do you have any role? I think this is a very important clarification that I need to get, if possible. Does the bank, or any bank, have any role in who is employed to carry out that work?
We don't recruit for the court services. I can't answer that question. We don't advise who the court service should use for the execution of an order.
Okay.
Can I just add to what your Deputy Murphy, if you don't mind? I'm just asking the question. I'm putting it, I suppose, the same way. Is it fair to say that in all evictions, it's the registrar who has been ordered by the court, the county registrar has been ordered by the court as the sheriff to do the eviction, and he decides, without any recourse to your bank anyway, we can't say what other banks do, that he goes off and finds his security team, his people, and you have no say as to who's a good security company or who's bad? Or is that what you're saying?
He will set the date and make the appropriate arrangements and arrange for whatever support may be required.
And he'll obviously tell you, I'm asking the question because I don't know, is he saying to you, obviously I'm going in on Tuesday morning at 9:30, I'm doing the eviction, but you'll need to staff here at 10:30 because I'm going to be handing the property back to you at 10:30.
Yes.
So can I just again, and I'm not going to continue this, so you're clearly saying it's the court service who hire the company to evict the families. Is that it? It's a yes or no?
It's the responsibility of the court service.
You see, we're playing around with words here. It's very simple. Is it the court service that nominates the firm or employs the firm to carry out the eviction without any interference from the bank?
The bank will have to work with the court services. They'll have to work in order because the property is going to be handed back to the bank. Yeah. So but it's the court services that execute the repossession order.
So there possibly is some involvement.
They will have to hand the property back to us when it's finished.
Okay, I'm not going to get a clear answer. I'm not going to proceed any further. Look, and I appreciate it's difficult for you people as well, and I understand fully where you loan money, your right to look for it back is important. I don't deny that at all. But can I ask you again, and I'm not going to name the family, but in relation to particular evictions, did you make or do you make an attempt where there's a family home and a farm to allow that family stay in the home and maybe secure an extra bit of land in your procedure, rather than toss people out of their home?
We give every opportunity for people to engage. If I take even last year, we had 4 out of 10 cases in the legal process last year where we paused the legal activity because the borrowers had re-engaged, even at that late stage. We had 2 out of 10 cases last year where we actually stopped the legal process. So the borrowers had engaged very late in the process, but they still engaged. We are open to engagement at all stages. We will engage with anyone. We've engaged with people where the repossession order is about to be executed. We had circa 5 cases last year where we had a repossession order about to be executed, where we now have people back on resolution options. So we are open to engagement at all stages. Absolutely.
Can I just say, Mr. Mann, I'm not trying to badger you, but it's my responsibility to ask such questions. There's been a lot of turmoil in my part of the country. There's a lot of people, very genuine people, upset. And that's why I have to ask those questions here today. And I again want to put on the record, the individual from your company I dealt with was very helpful and very fair. And I thank you for attempting to answer those questions.
Would you like any more time? I mean, you can have as much time as you want, Deputy Murphy, to be honest.
I don't. I mean, look, there are ongoing legal proceedings.
I'd like to put one question just in relation to the same. That typically, there's a security team goes in with the registrar to take over a property. Would it be normal that that same security team continues on a different paymaster, if you like, or is it more likely that you'll have a completely different set of individuals?
They can be the same. They can be the same.
So what can happen is that the team that the county sheriff engages can 1 minute be paid by the county registrar and the court system, and a split second later being billed to KBC. Yeah. And is that more likely to happen than less likely to happen?
That can happen, so they can be acting as bailiffs for the court.
In 10 cases, is it 7 or 8%, 80% of the time, or 10% of the time?
I don't have a figure, but it could happen. It depends on the locality of the case as well, but that can happen, yes.
Okay, so there is, I suppose, there is obviously then a level of engagement the KBC have with the same security team who have carried out eviction in some cases, which I think is probably not what I was familiar with before. Yes, yeah.
Can I just ask on that then, who pays the security firm involved in the eviction part of it, and then if there's a separate one that takes possession of the property, as in when it's handed over? So is it the court service pays one and the bank pays the other? Or?
I'll come back with more detail, but we pay for the security of the property after the repossession. So that's where it's then in our possession at that point.
John, before you came back to everything, but I think what we got out of the earlier point, if you want to just clarify for the benefit of the members here, is that when an eviction takes place, all the costs relating to the actual eviction are a cost of the court service, and you don't contribute towards the cost of those court services other than your own legal costs in bringing the court through the... So it's the court service, ultimately the state pays for the cost of the eviction, is that correct?
Yes.
Well, you don't pay for it anyway, or the bank doesn't pay
we don't pay for the court services, no.
So they pick the company to carry out the work.
But the registrar, is it fair to say that the registrar, not in consultation with you, hires the people, but then you may end up hiring the same people for purposes of convenience, if nothing else, that they're already on site. It could be a location that's not easily accessible to lots of security companies, and say, right, well, you're already there, you've secured the property, we're now going to pick up the bill from now on until the property is protected. And that sometimes regularly happens.
Yes. Yeah.
It can happen. It does happen frequently. No, it's not an exception. It's quite often.
It can happen. Yeah. There's a limited number of firms that can provide that service in the country.
Yeah. So it can happen. I mean, I think I'm not trying to put words in your mouth, but equally, it can happen. Could mean 1 out of 100. Is it typically the case that it happens?
It can happen. I would say it can happen a lot of the time. Yes.
A lot of the time. Okay. Deputy Murphy, do you want to ask anything else? Deputy McGrath? No? Well, then just to thank you, Mr. Robin, on your first occasion here, and to equally thank maybe some of the other people's first time as here, but certainly as CEO, you're very welcome. Mr. Darcy, Mr. Mann and Ms. Deering, and we wish you well, Ms. Deering, on your new extra additional role on the Irish Culture Board and the Irish Banking Culture Board. And that concludes the meeting now stands adjourned until next Tuesday at 28th of May at 1:30 p.m. Thank you all very much for your engagement. Thank you, members.